What the heck is happening to mortgage rates in Canada? We're going to look at what the current mortgage market looks like right now, what we can expect from the Bank of Canada at their upcoming meeting this week, and a little advice for you if you're trying to choose a mortgage rate right now.
This is the Saskatchewan Real Estate Podcast, the show that highlights Saskatchewan real estate. Looking to buy your first house, your next investment property? Subscribe to never miss an episode. Here's your host, Ron Caroni.
Hey, what's up, guys? This is the Saskatchewan Real Estate Podcast. I'm your host, Ron Caroni, a mortgage associate here in Saskatoon, Saskatchewan. We love touching on all different aspects to do with real estate here in the province, as well as some bigger topics that are happening in Canadian real estate as well. If this sounds like content that you could use, do us a favor and hit the subscribe button. Now, before I get into any information based on mortgages, Bank of Canada, interest rates, I just want to let you know this is all based on my personal opinion and my best understanding of the mortgage market. If you're currently in the market looking for a mortgage, you need to be reaching out to the proper professionals to make sure that you get advice personalized to you. So for context, it's October 24th, 2022. It's been another tough month for mortgage holders as Canadian bond yields continue to rise. Now, when this happens, Canadian lenders, banks, and monolines increase their fixed rate products. There still continues to be big discounts with monoline lenders versus your big six banks. So whether you're buying, renewing, or refinancing, it always makes sense to touch in with your mortgage broker because some of these monoline lenders are only available in our channel, and you're only going to have these if you are going to a mortgage broker. It doesn't cost you anything, and it could save you thousands of dollars in the long term. Let's quickly touch on variable rates. Lenders have not drastically altered their discount on variable or adjustable rate mortgages, but I do still see a trend where monoline lenders do have better discounts than their big bank counterparts. So again, makes sense just to quickly touch base with your broker. The big thing when talking about variable or adjustable rate mortgages is the Bank of Canada's meeting that's coming up on October 26th. What is the Bank of Canada going to do at this upcoming meeting? Now, one might think with a slowing economy and a global recession beginning that the Bank of Canada might just start to ease these rate hikes. One problem: inflation continues to be well above the Bank of Canada's 2% target. And in my mind, it really comes down to one of two things. Will the Bank of Canada continue its fight against inflation, or will it start to choose to break the economy? Now, so far, it's chosen to higher interest rates, which has had a dragging effect on the economy. But how long can they keep these rate hikes up? The bank is currently sitting at a key interest rate of 3.25%. For more answers on this, let's check out an article from the web citing CIBC economist Benjamin Tal. Delivering a keynote address at the National Mortgage Conference hosted in Vancouver by Mortgage Professionals Canada, Tal said that the central bank could avert a deep recession by ending its rate hike trajectory after one or two further jumps, potentially by 50 basis points followed by another 25-point increase. This is Tal. I believe that if the bank stops at 3.5% or 3.75%, even 4%, you can have this recession that is happening now without major damage, and therefore I will not call it a recession, he said. However, if you go to 4.5% or 4.8%, as many people expect, you could cause significant recession with the unemployment rate rising to 2-3%, which will be recessionary. That will be, people believe, what you need to do in order to take inflation to 2%. He disagrees. Around 50% of the recent decline in inflation has caused by easing supply chain pressure, he said, meaning that his message to the Bank of Canada is to stop at 3.5% or 3.75% and call it a day. See what happens. You don't have to overshoot. So if Benjamin Tal was to be listened to, we'd be in for one or two more small increases in the Bank of Canada's key interest rate. My hope in the next couple of meetings that the Bank of Canada holds is that we either hold the line at where we are or just see minor increases. I do think the Bank of Canada has made a critical mistake here. In July 2020, they were encouraging borrowers to take on home loans and large credit, and they said they would keep rates low. With that in mind, I think the Bank of Canada owes the Canadian public a service to hold the rates where they are. Now, with all that being said, if you're currently a homeowner, someone who's looking to buy, and you're renewing, refinancing, or purchasing, what should you be doing with your mortgage rate? I'm going to take you through 3 scenarios of what I'm seeing right now. All right, so option number 1, you can take a shorter term fixed rate. You as a borrower, maybe you're thinking right now that with all of the current economic turmoil, we may see an economic downturn. Now, in a couple years, we might see things normalize, and you might see the bank start to stimulate the economy again to help it move along. In this case, that would mean that rates would be a little lower at that time. So you're going to take a shorter term fixed rate now in the hopes that rates are going to be lower in the next couple of years. Option number 2, you can take a longer term fixed rate. Now, you might do this because you believe the Bank of Canada is going to have a tough time battling inflation, and rates are going to have to remain high for a long period of time. Keeping in mind that the longer you have a fixed rate term, the higher chance you're going to incur a nasty prepayment penalty. Finally, there is the variable or adjustable rate mortgage. Now, typically people are taking the variable or adjustable rate mortgage for its historical performance of outperforming the fixed rates, as well as a better prepayment penalty calculation. Now, the one thing to keep in mind with this is if you're taking a variable right now, you're probably thinking the Bank of Canada is near the end of their rate hike cycle, and likely as we enter the next couple of years, they're going to start lowering their rates to help battle this upcoming economic downturn. The one thing we have to keep in mind with variable rates is that rate can fluctuate, just like we've seen in 2022. So borrowers who take a variable or adjustable rate mortgage have to be prepared for some fluctuation either in their payment or the amount of principal that's being paid down on their mortgage, just like we've seen in 2022. All right, guys, that's all I've got. Let me know in the comments what you think the Bank of Canada is going to do at this upcoming rate hike, and let me know what you think people should be doing with their mortgage rates at this point in time. Thanks so much for checking out this episode of the Saskatchewan Real Estate Podcast. I hope you found it informative and took something away that you can apply to your everyday life. If you did find it informative, do us a favor, hit the like button, and please consider subscribing to never miss an episode. If you're living in Saskatchewan and you're looking for a little more advice on your personal mortgage situation, I'm always happy to help people out with a phone call and help direct you to see if maybe we can find you a better rate than what you're currently getting at your bank. I'm Ron Caroni, your Saskatchewan mortgage professional. Until next week, bye for now.